Hey, what's up guys, John here. 3 months ago, I did a video saying that a banking crisis was coming and we're going to start seeing bank collapses. A week and a half after that, we saw SVB and other banks start to collapse. All I did was simply look at what was happening behind the scenes and connect the dots for you and for us to have a conversation about this. Now, what's happening is going to be much, much bigger than what happened then. When we look at what Janet Yellen is saying, when we look at what Jerome Powell is saying, when we look at the new banking regulations that are built to attack small, regional, local banks, credit unions, we all have to pay very, very close attention to this because I think it's going to restructure the entire financial system. In this video, I'm going to break it down for you with clear, verifiable facts that I'll leave in the show notes for you in this video. And today's video is sponsored by GreatCreditFast.com. That's GreatCreditFast.com. If you want to fix your credit, we would love to help you at GreatCreditFast.com, because as these banks start to consolidate, there's only going to be, in my opinion, probably 5 or 10 really big banks in the next couple of years. And those banks are going to have more power and authority than ever. So you're going to want to make sure that you have your situation buttoned up. You have bad credit, the odds of you getting a loan are going to be almost impossible from now until then. So take a look at this. So 3 months ago, global banking collapse confirmed, right? Janet Yellen came out and said she would not be surprised to see more bank consolidation. Then she goes on to say that smaller banks are holding a lot of commercial real estate loans. Right here, the commercial real estate sector, given the changing approach to work. It says, given the overall environment of the industry, it's likely for some smaller banks to consolidate. Now, if you remember, JP Chase was allowed to consolidate First Republic or to acquire First Republic, even though JP Chase had over 11% of the entire market share. Now, before that would be considered unconstitutional and illegal, and they would not be able to do it. But because it was a distressed situation, they were legally allowed to do it. Now, I believe this is going to be an excuse that's going to be used, and JP Chase, Bank of America, Wells Fargo, and some of these other really big banks are going to be able to go out there and acquire tons of these smaller banks. I think this situation is going to get really messy when we look at the real facts of what's going on. So right now, small regional banks, they hold 28.7% of assets, these commercial real estate assets, compared to only 6.5% of banks. Well, now it's more of a liability, but 28% of the entire market, commercial real estate loans, is held by these smaller banks. Now, if you look at what's going on, when we look at what's happening right now, office vacancy rate nationally is about 17.8%. About 4 years ago, that number was 5%. So you have vacancies increased by almost 4x, right? You have vacancies increased by almost 4x, and you have interest rates that went from 3% to 7%, and then you have insurance costs and property taxes rising, right? And as the economy starts to contract, more and more businesses are going to reduce their office square footage. They're going to start to downsize. You're going to start to see more pain coming. And then as that's happening, $2.5 trillion of commercial real estate loans need to be restructured, and give or take about 1.7 trillion of which is held by these small regional banks. So you have to ask yourself, well, what's going to happen next? Well, Janet Yellen, she said this about a month and a half ago, said that U.S. banks need to tighten lending standards to negate need for more Fed hikes. Well, if bank consolidations start to happen, of course, these big banks are going to start tightening lending standards. There's no doubt about it. And so are the regional banks. They're going to try to brace for impact and try to hold on for dear life. They're not going to try to take risk. But what's fascinating is they came out yesterday and said government could reportedly raise bank capital requirements for the big banks. Now, if you're maybe you're an everyday American and you're banking with a local regional bank and you have a great relationship, maybe you walk in, they're like, hey, Mike, hey, Sally, how are the kids? Great. You've been banking in there 20 years. And you start to see, the bank next door start to consolidate, or you start to see a lot of, uncertainty in the world. You might say, you know what, maybe I'll take some money out. Maybe I'll also take some risk off the table. You're going to put $100 grand underneath your mattress? No, you're probably going to go put it in a big bank. Well, if you won't, out of 100 people, 95 of those will. And so you're going to start to see more and more money flow. But as they start to change these standards, saying that the big banks need to be stronger, they need to be better capital, they need better capital requirements, right? And so as they start to do this, people are going to start saying, you know what, the only safe option out here is going to Bank of America. The only safe option is going to Chase or Wells Fargo, and that's what's happening. They are really putting the noose around small banks. But when this happens, I'm telling you, mark my words, in the next 2 to 5 years, the conversation is only going to be about climate. And if they have these big banks, and there's only a handful of them, they're going to be able to change the standard on who gets loans for what businesses, how it all works. This is really going to be a really, really big big story. And it's coming very soon. So everything's going to be about climate, everything's going to the environment, it's all going to be about that. And when they have these big banks with that type of control, it's going to be much easier to implement these new policies. As that is also happening, Ken Griffin, I've mentioned this before, but it just goes to paint the picture even further. Ken Griffin, he says that he's the wealthiest hedge fund manager in the world. He said that consumers have about $1 trillion in excess savings, right? And they're burning about $100 billion a month, right? So they're spending about $100 billion a month. He said that leaves them on track to exhaust their pandemic cash hoard in a matter of months. So look at what's happening to regional banks. Their deposits are getting greatly diminished. The assets that they held, these loans, are turning into liabilities. You're starting to see increased credit card defaults and increased auto loans, and the auto market right now is in very, very big trouble. So you're going to start to see these regional banks get absolutely hammered over the next year or so as they continue to increase interest rates, because they are. Whether you want to believe it or not, Fed Chair Jerome Powell says that rates may not have to rise as much as expected to curb inflation. Well, he said this in the 19th of May, about 3 weeks ago, right? And at that time, the following week, they came out with the inflation numbers. Inflation numbers said that it increased 0.4%. You look at the job numbers said that it increased. And you look at the other data points that they're looking at. They're all leading into a world in which increased interest rates are likely going to be coming, and they're going to be there for a longer period of time. And so as that's happening, it's a house of cards in regional banks right now. And it looks to me like this situation is going to get interesting, because I think a lot of Americans think that, we've been so cushioned for so long. The world has been relatively easy for Americans. Everything has always been, that might happen, that might not happen, not a big deal, we'll figure it out type of situation. But slowly but surely, it's death by 1,000 cuts. And if these small regional banks go, I think a lot of people don't understand what this actually means. Most businesses are funded by the small local bank. Most commercial deals, most residential deals, most loans, auto loans, car payment, like all the financing that people use for the most part comes from these smaller banks, not the big banks. The smaller banks is what really funds America, which funds the backbone of America. And when these small banks are basically being set up for failure, you have to ask yourself, what does the world look like when there's only 5 or 6 banks, right? What does that world look like? To me, that world looks like a living hell, right? And that's what we're, most likely going to be stepping into. I'm trying to see a world in which that doesn't happen. How would that actually not play out? Well, the only way would be is if they decrease interest rates dramatically. Even in that, though, that wouldn't do anything, because you're still sitting on tons of commercial real estate obligations, 2.5 trillion. And they're holding about a 1.7 trillion of these loans. So even if they decrease interest rates and consumers were able to put more money in these banks, they would still be sitting on massive losses. The only other way would be as if the economy completely turned back around, went back to 2016, 2017, everyone went back to the office, these property valuations started shooting up, and it was easy to refinance these deals. I think that's highly unlikely. If they really wanted to help these small regional banks, the government would step in to help and try to instill further policies, not to allow big banks to have a further competitive moat of advantage over small regional banks with these new capital requirements. They're setting these small banks up for complete failure and complete decimation in 2023 and 2024. Mark my words, we're going to start to see these small banks really start to fall apart. And it's really unfortunate. It is really unfortunate. But this is what's going to be happening in 2023. It's going to slowly start trickling, because I think Ken Griffin is completely right when he says that consumers have about $1 trillion in savings and they're burning about $100 billion a month. If we continue to increase these interest rates, think about it. Real wages, they said, decreased. So if real wages, they increased by 0.4%. So if real wages increase by 0.4% and inflation is increasing, so you have inflation's increasing at a much bigger number than what they're actually reporting, and their wages are barely increasing, so there's essentially a decrease in overall income. If that's happening, and the cost to service credit card debt, auto loan debt, and personal loans is increasing because they're increasing interest rates, what's ultimately going to happen? People are going to default, start walking away from these loans. And who's holding most of those loans? The small banks. What do you think about this entire situation? Do you think we're stepping into basically a domino effect across small, local, and regional banks in starting this year? I think what we saw before was nothing. SVB, Signature Bank, First Republic, and Credit Suisse. That was that's nothing, because most people still think that commercial real estate and office and other sectors are going to be completely fine, and they're going to be great. Maybe in certain pockets of Florida, possibly, maybe in certain pockets of Texas, maybe there's more demand there. But in most areas where people are buying these large-scale commercial real estate deals, LA, San Francisco, New York, a lot of these deals are underperforming dramatically. I mean, there was a deal in San Francisco recently that was sold in 2018 or 2019 for $330 million, and now it's under contract for $60 million, right? These small banks, they're not just going to isolate losses in certain areas. It's going to be everywhere, and it's going to be harder to get loans. But I think when it gets harder to get loans, there's even more opportunity. I mean, trying to look at the positive side of it, there's even more opportunity for people that want to invest in real estate, that really have their stuff together, they're really responsible on paper, that are positioned well for this. Because what else can you do? You position yourself well. Winners will always win. Position yourself well, have a strong source of income, good credit, have a really good game plan, and understand what's actually happening. We're walking into the greatest wealth transfer of all time. It's the greatest rug pull of all time. I've talked about this on this channel for about a year and a half, saying that we're stepping into this massive wealth transfer, and it's happening. Day by day, it's happening. Drop your comments below. Subscribe here. And if you want to fix your credit, we'd love to help you at greatcreditfast.com. Go there, schedule a free call, a free consultation at greatcreditfast.com, and add me on Instagram for content you won't get here. I'll catch you guys in the next video.